And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Thank you, Holden. Welcome to Coach's Playbook. It's Tuesday, February 7th. Mick saw the mayor yesterday. How was it?
Fine. Just in passing. Didn't say anything. She was surrounded by some security.
That happened to my brother. Was at the hideout and ran into Rahm Emanuel.
You just muted yourself.
Just muted myself. Sorry about that.
He doesn't have anything good to say about the mayors of Chicago.
Well, yeah, that'd be an elusive club. But anyway, today we're not talking about the mayors of Chicago specifically. They might come into it, but we're talking about how we study the markets. But first, Mick, I understand you have a trader shout out for us today.
I have a shout out. Big shout out to Jung Kim, up $4,700 right now, trading the NASDAQ today. So heck of a great day. We've got many more, but that's one of the leaders on the board.
Good show. Yeah, we like our trader shout outs. Mick, maybe if we get saucy at some point, we'll do a trader call out too, where we keep people in line. If you're really messing around, trader call out.
Do you want to start that today? I got to do it.
If you do it anonymously, maybe tell us what someone's doing that you don't like. Yeah, sure. Why not? I'll let you think about it while we go around this topic. So this came from, I believe, a list of topics people wanted us to discuss at some point. Basically, how we go about studying the markets. And I would love to hear how you guys did it. I think there's a lot of sort of mentorship that goes on in trading. I feel like I don't know many people who just kind of started on their own trading and just kind of learned completely by themselves from books and stuff like that. But I thought we'd go around to start maybe with Hogue here. Hogue, how'd you kind of get into this? And also, I know it's a broad question, but how do you study the markets or get an idea? Because you talk a lot about market state.
Mm-hmm.
How do you frame that out?
Okay. It's a very broad subject. There's a lot to it. Mm-hmm. But the one thing that I always try and remember is that the market is its job is to facilitate trade. If the market is moving in a particular direction, my question is always, okay, it's attempting to move higher, but how good of a job is it doing in the auction process? So context, longer time frame to shorter time frame context is always important, even for a day trader. Looking at the nuances that the profiles are saying day over day, as a technical analyst, looking at the charts, looking at what the market is trying to tell me is, it's telling us what it's trying to do. It's up to us to try and figure out what it is. So it's all about the context in multiple time frames, remembering that the markets are a never-ending two-sided auction process, and then monitoring the success or failure of the auction process in several different time frames. It's a lot, I know, but it keeps me from making mistakes, number one, going against what the longer time frame context or what the longer time frame auction is doing, and hopefully helps me find good trade locations close to points of invalidation so that I can find some decent opportunities for profit. It's Not sure if that's what you were looking for, but that's what came to mind right there. But
It was perfect. I have no notes there, Hogue. It was absolutely perfect. I especially liked what you said about multiple time frames. And I think when it comes to studying markets, beyond maybe the first thing you want to do is poke around online a little bit, but specifically look at the CME website. If you're trading futures, figure out exactly what it is you're trading, right? I think there's maybe too many people out there that don't understand when they're trading oil. I think they understand that they're trading oil, but I bet there's a proportion of them, I don't know what exactly would be, that don't know exactly what it is that they are trading.
Stealing
I.e.,
from me what I was going to talk about, Jack.
you know what?
Better get
Sometimes I'm just
going, Dan.
clairvoyant. You're trading 1,000 barrels of oil at a specific standard to be delivered to Cushing, Oklahoma, if you're trading the CL contract. And I think even just simple insights like that tell you a lot about when you start to look at the price action from history, gives you a much richer context. So Dan, I already stomped on yours. Did you want to add anything else there?
Yeah, I think there's a lot of like different facets when it comes to the idea, the broad term of studying the markets. Like, what do you do? How do you go about it? There's a lot of layers to it. I think there's from day one, when you're getting into trading, there's that form of studying. Then there's, that veteran style of studying. I think, for a lot of traders out there getting into the retail space, the first thing you need to think about is what are things that you're interested in? Like, is it the economy? Are you interested in the economy? Are you interested in like gold and precious metals and things like that? Is that something that's going to pique your interest? You want to find something that's going to be really interesting, because you're going to spend a lot of time not trading it. You're going to spend a lot of time researching it. You're going to spend a lot of time learning how this thing moves. So right off the bat, it's find a product that you might be interested in. To me, I love, the economy. I love the markets. I love looking at what's going on in the stock market. I have a lot of fun in that aspect. And that's why, treasuries and stocks are really where I find my most comfort. I've grown into really loving oil because I think there's a really cool dynamic into the whole global economic value of what oil is and how it's impacted and how quickly it can change and things of that nature. So you really want to understand what you're going to be interested in. And then what factors can influence movement within these markets, right? Like we can talk about, certain numbers and how their impact on these markets are. Treasuries, I think, are a prime example of having things that impact those that don't impact others. You have auctions going 5, 6, 7, sometimes 10 times a week in the treasury markets. If you want to trade treasuries, you got to be aware of those, what these auctions are, what's coming into the marketplace, and who's going to kind of have an impact on that. If that's something that you're going to struggle with, maybe you stay away from treasuries. You don't want a lot of, economic numbers impacting what you're trading in. And you want something that's just going to be a little bit more consistent, and you have something simple like crude oil, right? And I say simple. I don't mean actually
Nothing simple about this. Yeah.
Yeah. Nothing is simple. But you look at crude oil, that's going to be impacted heavily on Wednesdays by that crude number, and Tuesday afternoons by the API number, right? Those are the things you're going to pay attention to, but when those are coming. It's going to be a little bit rare when you have things like we had a couple of years ago with, I believe it was in Saudi Arabia or Iran. One of the big refineries had an explosion that sends things kind of haywire for a little bit. You're going to have less of those quick reactions that you have to react to in a product like that. Not saying it's not going to happen. It's going to happen in all these markets. So I think that's really where you want to start, is find something you're interested in and you're willing to do the research. You're willing to spend time reading about it, learning about it, what factors are going to influence this and when are they going to influence it. And really, like, you become an economist in a sense on all these products. That's really the ultimate goal here, and kind of trying to determine where this is going to go.
Yeah, which gives you a bit of a more transferable skill than, say, there might be a few too many people out there whose love is they love watching the NQ whip around. Like,
why? And you got to ask yourself when it comes to studying is, why is it whipping around? And how do I take advantage of it? I think that's the thing that, a lot of traders aren't really thinking about. They have their indicators and their levels, and that's what they're looking at. But ask yourself the why. Like if you're willing to answer the why, that's where that studying comes in. You're going to learn about the product. You're going to learn about that market. You're going to learn those factors. And that's where it's going to be a little bit more fun, in my opinion, if you choose a product that you're interested in.
Especially if you can figure out a way to do that in a non-simulated market.
Yeah.
Anyway, just something that's on our mind all the time. Nick, before I kind of evolve and spread out a little bit here, is there anything you want to add?
Yeah, I mean, when I think about like how to study a market, there's a number of different ways to do this. I think how you study that market, your strategy should play a little bit of a role in how you study that market. We have, what are the two main types of studies out there, or analysis? You have technical analysis and fundamental analysis. So, this kind of goes back to what you started off by talking about, Jack, is know your contract specs, know the ins and outs of the product that you might be taking risk in. Be very aware, like Danny said, of, any economic releases that pertain to those. But you can apply technical analysis to just about any product out there. You'll see the same chart formations potentially. So technical analysis, in my opinion, kind of spreads across the board. Where you need to get more detailed, if you're looking at fundamentals, is fundamentals are difficult in regards to day trading. Fundamentals take a long play out in the market. So you need to be on a little bit of a higher time frame there. With fundamental stuff, who are the participants in this marketplace? Who are the producers? Who are the users? I think about when I started off in the grains, trading corn and soybeans, I was paying very close attention to, crop progress and production and weather in South America, as well as the grain belt. I also had to think about the demand side that's the supply side of things, the producing countries like the US, the grain belt, South America, Brazil, Argentina, that kind of stuff. But then you also have to think about, who are the users of this product? Where's the demand at? China is a big demand in the grains and stuff like that. So these are things that you need to look at. Studying a market, we study a market so we can see what the market's done in hopes of interpreting where it could potentially go to, profit from, price discovery. So, I always like the top-down approach, higher time frame, break it down to a lower time frame. So, anytime I sign onto the computer, I'm usually starting my day off looking at the daily charts to get an idea of the trend up, down, or sideways. But from time to time, you do want to have a little bit of an eye on a monthly chart or even a weekly chart just to get a further back look, see where we're coming from. I always find that to be interesting. So, studying a market, like I said, it's going to be based on your strategy. Things you might want to look at if you're on a higher time frame is open interest. Do you need to look at open interest if you're trading off a 5-minute chart in the NASDAQ or the S&Ps? Maybe not. Not something I would bother looking at, but good to be conscious and aware of all these things.
You see the larger players there, right? The further you zoom out on a chart time-wise, you get a fuller context of where it's easy to fall into the idea sometimes that everyone you're trading against in a market is another trader at a prop firm or something like that.
Right.
No, there's a lot of size. Yeah, go ahead, Mick.
Yeah, I was just going to add to what you were saying. You look at a commitment of traders or something, you see open interest, you have, large specs, speculators, small specs, commercial, that kind of stuff. And these people are holding massive positions for, longer periods of time. So does that matter to, a short-term day trader? Maybe, maybe not. But back to, studying the markets and determining where things are going to go, you're probably going to want to look at obviously the trend, but I always like to mention, previous days highs and lows and swing highs and swing lows. Those are areas of importance because they determine whether or not, the trading at that level or the activity at that level. Are we going to get range expansion from here, or are we going to, contract and, fall short of, taking out a previous day's high or low or a swing high or low? I feel like I could go on and on here, but I think I got my main points that I wanted to talk about across. There's a lot of ways. there's a lot of ways to skin a cat, and, studying is interpreting, and we all interpret things differently and study differently. So there's really, there's probably bad ways and good ways to go about that. But the more you do this, the more you're going to get a feel for what works out best for you and the strategy that you're, using to take risk in the markets and hopefully profit from.
I've also always been fascinated with that turn of phrase about the numerous ways to skin a cat. If you have 50 ways to skin a cat, please let me know. You're a sick person. Anyway, we got a hot and fresh question coming in off the comments. Do you think as a new trader, you should focus on just one asset class?
Yes.
Yes. And
100%.
Yeah, I'll expand a little bit on that. The biggest reason to focus on one, and focus on one does not mean do not be aware of it, but I feel you should trade one product, right? As I mentioned last week, I think it would help everyone understand the markets better if they learn something about treasuries and bonds in general, because those are just very important indicators. The yield curve is very important. It's the most liquid, largest market in the world. Yes, there's no reason, especially now in an environment where we have volatility. If you want to trade the ES, there's just no conceivable, unless you've just tried everything and it's just not working and you want to start anew somewhere else. Sure, whatever you trade that's a liquid market that's moving, you can have success or failure in that market. And there's no reason to say, nothing's added from, say, I'm an ES trader who also trades oil. My first question would be like, why? Was trading the ES not enough of a challenge for you that you have expanded outward to new horizons? The grass isn't greener. It's just a market that you have less of a feel for. So I would say, even if you're not beginning, I'd say even if you're a pro, that eventually you want to be specializing in one thing.
Yeah, and to add to that too, and Hogue, you probably know better than anyone, guys that have been in this the longer I know, the people I know that have been in this the most and the longest and have spent more time in the act of trading are probably the most disciplined to simple single products. And when I say even single products, like my background, options, obviously there's, you had weeklies, you had monthlies. You could trade 3-4 months out, and guys, there were certain guys that focused strictly on trading the weekly product, not even the monthlies. And they were keeping it that minute. And you had guys that, were only focusing so far outside of the premium, where that market was trading. They were only focusing so far away because they didn't want to get too far, and they were really successful at what they did. And I think, John, you tell me, you've been around this a little longer than I have. I mean, like we said, chalkboards back in the day. So those guys were probably focused on one too.
Well, back in the trading floor,
ahead,
if you were standing in the wheat pit, you traded wheat. You didn't get to just switch back and forth between products as simple as changing your dome on your computer. If you were trading that product, that's what you traded. And I think you're right, Dan, in the idea that a lot of traders that are still active and new active traders, as they get better at what they're doing, are focusing more and more on one product. And I'm talking smaller speculators, guys like me and you, and some bigger speculators that are holding positions for longer periods of time that may be a little bit different. They're looking for setups in a particular market, and if it shows up in another market, they may respond to it. But I agree that most of us are really focusing on one, maybe two products.
Yeah, I think some of those big time guys, they're using one product to hedge another position on a different product, right? That's something to think about, I guess.
There's so much to learn below the surface of these things. Go ahead, Mick, and then I'll
do I need to raise my hand on Zoom here to get a couple words out?
I think
hang on a second before you say that, Mick. I got some. Go ahead, Mick.
All right, I got my hand up. I think you'd have a really hard time finding someone who's actually successful in trading that would say, oh no, don't focus on one thing. You can trade anything out there that's on your quote board. People don't realize the amount of concentration it takes to manage positions properly. and stay focused. I've certainly had multiple positions on at the same time, and it's not easy. It's very tough. You miss something in one market, you miss something in another market. It's specialize in something. And, Hogue brought up the wheat market. I, with trading grains and stuff like that, when there are down times in the market, or, you have sideways price action for a while, like, that's not to say don't go try and find opportunities elsewhere. If your market that you're trading, there's not many opportunities, like, there's nothing wrong with going to seek out opportunities elsewhere, but be very careful. And if you're going to do that, go in and start small, toes in the water. Don't think that, you're trading big size in the grains and all of a sudden you can go in and start trading natural gas, trading the same size. That's not the case at all. You'll have a very painful, costly learning experience doing that.
Because you don't have the context that's happening under the surface. Mick, you can lower your hand unless I think what's going on, Mick, is there's like a quarter-second delay or something with you. We're not, for those of you watching, we're not purposely just trying to jump over Mick's every word. It just seems to be happening right now.
I've always been a little slow, Jack.
Well, yes. So another reason to stick to one product, right? Just got to rub those brain cells together. The context is, you might not know, for instance, like I traded bonds for years. If you were to start trading 10-year treasuries tomorrow, you wouldn't be familiar with stuff. So as the market sells off there, for instance, I think your less experienced trader will always just want to buy things that look cheap on a chart and sell things that look expensive on a chart. Now, here's some added context. When the treasuries are selling off, it begets more selling, because all these things like mortgages, everything else that has rates, they need to hedge these massive positions. And so as the interest rates, so selling off, interest rates go higher, they need to sell more and more to stay hedged in these portfolios. It gets complicated, but that's the sort of stuff that you learn only through looking at the market and studying it for a decent amount of time. So don't be jack of all trades, master of none. And then you corrected me again, Dan.
Yeah, a master of none is always better than a master of one.
All right, other question on the hotline.
Really, one last thing to add. I wanted to add to it because I wanted to make sure it doesn't. We're not saying don't look at other markets. I think it's very important to see what all the other markets are doing, because they influence a lot of what we look at in our own trading. I would just say focus on trading one. You can look at many.
Yeah, and you can also, not in the combine, but you can do spreads and stuff if that's your strategy. I mean, like, sorry, I have a very howling pug in the background. I'm not sure what's gotten into him.
Rodney. There's a lot of correlations too. Danny talks about watching other markets and stuff like that. There's a lot of correlations out there too, but correlations always change. And then, it's been a while since correlations have gotten brought up, but you have to also look at correlations too. There's shorter term correlations and longer term. One of the sources that I use for my correlations, I flip between a 30-day correlation percentage and 180-day correlation. They're vastly different in different environments.
I think the reason correlations have gone out of vogue is because in 2022, you got absolutely pummeled. Because the classic correlation is that there was an inverse relationship between equities and bonds. And this year they hosed you on both ends. So anyone doing that. Yeah. And gold. Anyway, sorry, I will get to this question, I promise. So do you study price action, i.e. pivot to pivot, number of ticks, etc.? Hogue, I think you do. You don't? Yeah, you're on mute there.
Price action, so short time frame.
Well, and price action is multi-time frame.
Yeah, I guess I'm interpreting it differently. How the question is there. Sorry, I have a lot going on my place right now. I'll let you guys discuss it real quick.
Not looking at anything pivot to pivot, I don't even really look at pivot or support resistance lines, simple pivot, floor pivot lines, they used to call them. But, price action, I'm very interested in. Price is the advertising mechanism of the auction process. But I think it's a different way to look at it as, if price is moving higher, okay, but how good of a job is it doing? Mick mentioned open interest, which is something that I look at, very carefully. And with the S&Ps, we've had 2 days of lower price action on lower open interest. That's not very healthy for a downside auction. And Powell just came out and knocked the S&Ps back to the upside, at least for right now. So, there's it, not saying that there's anything wrong with what you're doing and what you're asking. It's just not what I do.
And to touch on the ticks, I don't know if that's tick charts or whatnot. I mean, ticks show the activity at a certain price. And, I've used tick charts in the past, and, depending on how many ticks you have plotted on your chart and your settings, I mean, it can correspond to just a time frame, chart as well too. You mess around with those and change them. You can almost paint a very similar picture using ticks in the charts.
Thank you guys for that. On that note, anything else we want to add about studying before we start winding this down today?
Yes.
I have one thing too after John.
Mick, you go ahead, please.
Okay.
Please, Mick.
So studying a chart, the one last thought I want to share is, if you look at a chart, you will see a lot of candlesticks going up and down, back and forth. I'm talking about price bar overlap. Very rarely do you ever see a chart go exploding to one direction or the other without looking back. There's expansion, retracement, all this kind of stuff. Keep in mind all this price bar overlap. Things don't move straight in one direction. So, definitely grabbing that concept or grasping that is something that's helped me tremendously for trade entries. I'm not buying new highs. I'm not selling things in the hole as we're making new lows. I'm looking for pullbacks, because I know that whether I'm looking at a 5, a 15, or a daily chart, we have all this price bar overlap. So something really big to keep in mind there.
Good point. Hogue?
One thing about studying markets is you're never going to get a bachelor's, a master's, or a doctorate. You are going to be studying markets for as long as you're trading those markets. Every time I have let my left down, I've gotten a right cross across the chin. So remember, there's always more to know, always more to learn, and the markets are always changing. So your studies are going to last for as long as you're trading.
Ongoing. Wow, that's a lot to digest there. Thanks, guys. Dan, do you have a quote?
I do. I have a pretty cool one from the late great Pele.
Recently
success,
late. Always great.
Yeah. Success is no accident. It is hard work, perseverance, learning, studying, sacrifice, and most of all, love of what you are doing or learning to do.
That's a good point. If you're miserable trading, find there are other ways to make a living, right? And I think we see sometimes, like, there's no shame that if you don't love it, do something you love. Hogue, do something better. You're better at those sort of philosophical pump up quotes. So I'm thinking maybe you could sign us out today.
Sure. Yeah. I've been at this a long time. Obviously, I love what I'm doing. Do I love it every day? No.
Mm-hmm.
But overall, I can say that the journey that I've experienced in trading so far has been, challenging, exasperating, aggravating, delighting. It's the whole thing. It's life. And but again, if trading makes you unhappy, you're never going to be good at it.
Well put. Well, we'll be back next week for another Coach's Playbook, maybe a little more upbeat. Who knows? We'll bring more stories about mayors we meet along the way. Anyway, that's all. We'll see you next week. Have a good one. Peace out.